Welcome back to unit number 8 in recording financial transactions. In unit number 8, now our focus is going to be on maintaining petty cash records. If we recall, petty cash book is one of the books of prime entry. We have just looked at the cash book, how to prepare cash book as one of the books of prime entry. And our next focus, therefore, is on petty cash book, maintaining the petty cash records. Now, most businesses will make small payments in form of cash or in form of notes and coins. And petty cash system is an effective system that we will use to control these petty cash payments. So in this unit, we are going to focus on 7 key areas. Number 1, why do we need the petty cash book? In other words, the purpose of the petty cash book. Number 2, security and controls of the petty cash book. Number 3, the imprest system. Number 4, petty cash vouchers. Whenever you make any payments, a petty cash voucher should be generated. Number 3, the petty cash book. How do we prepare the petty cash book? Just a sample. Number 6, recording and analyzing petty cash transactions. And finally, topping up float, balancing off, and posting petty cash in the general ledger or in the petty cash book, and then later on it goes to the general ledger. So those are the 8 or 7 key areas we are going to focus on. So let's start with number 1. Why do we need the petty cash? Remember, petty cash is used to make small payments, and these payments are in notes and in coins because it's payment out of cash. Cash can either be in notes or coins, but remember, they are small payments, not major payments in the organization. Because we are dealing with physical cash, cash must be kept safe, and it must always be locked, just like we saw when we were explaining cash book. It must be locked in a box or a tin with security control measures, and this petty cash is the responsibility of the petty cashier to manage it. Payments must be properly authorized. However small the payments are, there must be a proper authorization, and supporting receipts and vouchers must be provided for every payment or receipt that has been made. The second item, after looking at the purpose of the petty cash book, remember we have said the purpose is to record small payments in form of notes and coins. Security and control of the petty cash. Here we are talking of cash. So our cash must be kept safely. So all payments out of the petty cash must properly be authorized. There must be somebody to authorize expenditure through the petty cash. And there must be supporting documents, which includes a voucher, which is signed by both the person who is going to receive the cash and the person going to issue the cash. Both the two parties, the issuer and the receiver, must sign the voucher. Claims for payments must be supported by a receipt whenever possible. It's not compulsory sometimes, but it's a good practice that all petty cash payments must be supported by a receipt. Now, in every organization, there is a maximum amount of money that is allocated to the petty cash. And also, there is a maximum cap on what can be paid through petty cash. So there should be a maximum limit on the amount of any individual payment. It might be a rule of the organization. Just as I have said, every organization have got a certain limit, a certain cap on the amount that can be financed through petty cash. Remember, we have said it's a good practice to have a receipt. But if there is no receipt to support the claim for payment, there must somebody in a higher level to approve the payment without a receipt. So there must be a supervisor to approve the payment without a receipt. Now, this process of maintaining the petty cash, it's maintained through what we call an imprest system or the imprest system. So imprest system is just a system. Remember, a system brings together different parts. But in this case, when we talk of the imprest system, this is just the process of knowing how much is allocated to our petty cash, how much is spent, and how much is stopped up at the end of a given period. For example, if in our organization, the petty cash in a month is 2 million, that's just an example, 2 million Rwandese francs. Now, in a month, we cannot spend more than, if it's a big organization, of course, we cannot spend more than 2 million. So whenever we start spending through the petty cash, you find that by the end of the month, maybe we have spent 1.8 million. So at the end of the month, there is a balance that is remaining in cash of 200,000. We need to top up the petty cash to return us back to where we started from. We started from 2 million. At the end of the month, we should also be having 2 million. So every month, we should be having 2 million. So what happens? We look at all that we have spent, and then we refund it. We bring in new cash from the bank. So if we have spent 1.8 million, at the end of the month, we are remaining with 200,000. We will bring in a new 1.8 million to replace what has already been spent. That process is what we call the imprest system. That process of having the amount in the petty cash, spending, and then topping up the amount that has been spent. So we are trying to say the imprest system is a system in which there is the maximum amount of money in a petty cash, and that amount is called the imprest amount. The imprest amount varies from one organization to the other. Of course, it depends on the size of the organization. Now, we have said if there is any payment, there should be two important documents which you should support. Whenever the petty cashier is giving out payment, he fills the amount that has been given out in what we call a petty cash voucher. This voucher records how much has been issued out to the person taking the petty cash. This voucher must be signed by two parties, the issuer and the receiver. So that is, the receipt for the expense incurred will be attached to the voucher. So if there is an expense spent we've spent on it using petty cash, we must provide a receipt for that, and that receipt will be attached to the voucher. In our next area, petty cash book. Now, what is a petty cash book? This is a book where we record the amount we record the entries of the petty cash. A petty cash book basically has got 3 sections. So if we can look at these, a petty cash book can have a lot of sections, but there are 3 major sections. So this side, it shows, okay, let me have it something like this. This side, the debit side, shows your receipts. The credit side shows your payments. Remember, we are looking at the petty cash. Now, the middle part shows the date that the transaction took place. The date that the transaction took place. And then, now after the date, we have subsections. And here, we'll be posting the total amount that has been spent. For example, if we gave the accountant or we gave an employee some amount to go and buy some stamps. So maybe on the 1st of May, there was maybe even telephone. So there is an amount of, sorry, there is a section I've left out, an important one. So I'll have something like this. There is a section I left out. So here we'll have details, and then we'll have totals, and then the breakdown of the totals. So for example, if on 1st May, we spent something on telephone, we topped up the telephone. Now, we spent maybe 20,000 on telephone. There should be a list, this other side, a list of all the items that we spent petty cash on. For example, the accountant must have developed a template of a list that we spend on. So maybe here there is what? Telephone charges. Maybe there is another one called stamp duty. Maybe there is another item called transport. The amounts we spend on. In other words, you list all the expenditure that is financed through the petty cash. So if there is a telephone here, you'll post it under the total, and you will also post it under the individual expense. You come to the second date. Maybe the second date was on 2nd May, we spent on transport. You come and have your total transport, maybe is 1,500. So you will come and post there 1,500. The point I'm trying to make, there should be analysis of the total payments and the breakdown of the individual expenses that are financed through the payment. On this other side, it shows our receipt. So the amounts that were received were reflected. Maybe in a month at the beginning on 1st May, we received 2 million from the bank for the petty cash. So this side shows the amount received, and this other side shows the amount that has been spent. Next item. Now, this is basically what I've explained in the diagram we have just illustrated. So there is the left-hand side, which shows the cash received. There is the right-hand side, which shows the cash payments. And then in the middle, it shows the date of each transaction. Recording and analyzing petty cash transaction. I've also explained it through the example, but let's say similar in format as the cash book. Because also in cash book, we have the debit side and the credit side. Recording petty cash transactions. Now, sometimes there is a VAT even on this small expenditure. So long as there is a VAT, the VAT should also be accounted for. So when the VAT element in the petty cash expenditure is recorded, there must be a VAT receipt. You don't just record the petty cash VAT. It must be supported with a VAT. In Rwanda, we are talking of EBM receipt. So there must be a EBM and a VAT receipt that explains the total amount that is being financed, the VAT component, and also when it was spent. I'll come to that. The VAT element in the petty cash transactions should be accounted for separately, but only if the transactions are accompanied by a receipt. Don't account for VAT if there is no receipt. Receipt is a supporting document. Now, VAT receipt contains the following. I've already mentioned it. The total payment which was made. Out of that, the VAT paid. Maybe the VAT paid is 18%. The total amount, maybe the total amount was was maybe 100,000. I'm talking of small amounts in an organization. Maybe 100,000. And then VAT out of that, 18% of it. And then the supplier's name, address, and VAT registration number, the person you have paid. So we must give their name, where they are located, and their TIN number or VAT registration number, and finally the date that the payment was made. So what should you reflect? Total amount, the amount of the VAT, the supplier's name, address, and VAT registration number or TIN number, and the date the payment was made. In our 8th item, which is the last item, but we will take some details on it, topping up of the float, balancing off, and posting the petty cash book. So, for example, if a month, I'm repeating what I started with. If in a month our petty cash amount is 2 million, and then during the month we start spending, at the end of the month, we find that we have spent 1.8 million with supporting documents, vouchers, and receipts. 1.8 million. So, which means we did not spend 200,000. At the last day of the month, we must return the amount to where we started from. We started with 2 million. So we have spent 1.8 million. So we must top up the petty cash by the amount spent, which is supported by receipts and vouchers. So in that case, we must top up an additional 1.8 million so that by the time we are closing the month, we start from where we end from where we started. We started with 2 million, and when we are closing, we must also have 2 million. So you replace what you have spent during the month. And whenever you are having and topping up, a new page must be started in the petty cash book. The format, I've already explained it, but this is a more detailed one. So in a petty cash book, there is the date. This other side reflects the receipts. This other side reflects the payments. So there is the details and voucher number, because every payment there is a voucher number. So you show the voucher number, the total amount, and then the breakdown of the total amount. Breakdown of the total amount. For example, we may have spent something on light bulbs. We may have spent a total of 1927. Out of that, 1640 was office supplies, which is that it's part of office supplies, and the VAT component is 287. So when you add 287 plus 1640, it should give you 1927. A breakdown of what we have. Finally, sometimes we can operate without an imprest. It's advised that we have an imprest system, but sometimes we can operate without an imprest. Now, in operation without an imprest, some companies do not operate strict imprest what? Systems. For example, they may reimburse petty cash with 3,000 whenever the float gets low. This is quite acceptable as long as the float is balanced and the petty cash book is correctly written up. Practice questions. Some few questions we need to practice when accounting for petty cash. So we'll have about 8 questions to look at. They are not complicated questions in this topic. So remember, most of the questions in this topic are either theoretical or questions that ask you what is the total imprest amount, how much was spent, how much should be reimbursed. So they revolve around that area. So question number 1, which of the following describes the term petty cash? Remember, we have already discussed petty cash. It is used to make small payments in form of notes and coins. So which one of the following describes the term petty cash? Small payments in cash not dealt with through the business bank account. The small payments we don't pay through the bank. So A is the answer, but let's look at the others. A small float accessible by all members of staff for minor expenditure. Petty cash is not accessible to all. It is only for petty cash transaction. It's not a must that everyone must get the petty cash. Number C, used to reimburse employees for expenditure undertaken for business purposes. That is not true. Expenditure for business purposes can be reimbursed through the bank. It must not be through petty cash. Expenditure not subject to limits. All petty cash must be subject to limit. So our answer is A. A petty cash is small payments in cash not dealt with through the business bank account. Let's look at the second example. Which of the following is an example of a payment which could be made out of the petty cash? Again, I'm repeating it. Which one of the following is an example of a payment which should be made out of the petty cash? If the petty cash float is 1,000, if the amount of the petty cash is 1,000, which one of the following can be made through the petty cash? A, payment of an employee's parking fine while on a company business of 250. This is not true. Before you make this payment through of parking fine, you must find what caused the fine. The employee must have just made his own mistakes. Maybe he may have committed some crime. You cannot finance crimes through petty cash. You must find out a reason. So that is not true. We are looking for what can be financed through petty cash. B, purchase of a concrete mixer worth 2,750. This exceeds our float. It exceeds our amount of petty cash. So this cannot be financed through petty cash because it exceeds our amount. That will be financed through bank if our petty cash is 1,000. Number C, the first installment of a lease agreement of 150 per month for office equipment. These are regular payments because it's just the first installment. It means there will be other installments. So these are payments which are not financed through the petty cash. Remember, petty cash are for small payments that are one-off. So, and D, purchase of postage stamp. Yes, postage stamp can be financed through petty cash, and it's also the amount is below the petty cash amount. So our correct answer is D. Our next question. A petty cash interest is 5,000. A spot check by the auditors of the petty cash revealed cash in hand of 450. In addition, valid vouchers to the value of 3,950 were produced by the cashier. How much cash is missing? So how much cash is missing in these transactions? Let's look at it again. A petty cash interest is 5,000. So we are limited to 5,000 expenditure in the petty cash. A spot check by the auditors of the petty cash revealed cash in hand. The cash that was remaining was 450. In addition, valid vouchers to the value of 3,950 were produced by the cashier. How much is missing? So to know the amount that is missing, we will come here and we have what is our petty cash amount. So our petty cash amount is 5,000. And then we come and less the cash that we have in hand. The cash in hand. Cash in hand. So our cash in hand is 450. And then we come and less what has been spent with supporting document. In addition, valid vouchers were 3,950. So you remove valid vouchers, 3,950. Remember, that's 39. So what is missing? What is missing is what has not been accounted for. And the auditors would have detected that 5,000 minus 450 minus 3,950. So that gives us 600 has not been accounted for. Because at the end of the day, the cash you are remaining with should plus what has been spent through supporting documents should be equal to the petty cash amount. If it is not equal, there is some amount that is missing. So our correct answer is A. That is amount that is missing. Question number 4. Maybe let's have a new page for the next question. Now, your company has a petty cash interest of 7,500. And this is to be increased to 8,000. So there was 7,500 and maybe our company is expanding the expenditures. and now it's to be increased to 8,000. At the end of the month, the cash in hand is 570. And receipts and vouchers total 6730. How much cash is withdrawn from the bank to restore to the increased? So, petty cash amount, the new amount is 8,000. 8,000. And then you are being told, at the end of the month, the cash in hand, less cash in hand. The cash in hand is 570? Yes. And then vouchers. You less what? Vouchers. Our vouchers and receipts show 6730. Now, okay, how much cash is withdrawn from the bank to restore that? So, okay, cash in hand is that 16. Let's first of all, how much cash is withdrawn from the bank to restore the increase in what? Interest. The amount to be withdrawn to restore will be the vouchers amount, the amount in the vouchers, 6730. Let me see this. 6730 is the how much, let's read it again. How much cash is withdrawn from the bank to restore the increase in the interest? So we have spent, remember we have spent, at the end of the month, the cash in hand, the cash we are remaining with is 570. The receipt is 6730. How much cash is, so it will be, let me see this. So it will be the petty cash voucher amount plus the difference between this and the new amount, plus the difference is 500. So this is what we were supposed to have. So that is 6730 plus 500. It gives us 7230. So we get 7230. There was a mistake in the answers. It should be 7230. That is what was confusing. So this may be supposed to be 7230, not 7430. Because what should be withdrawn from the bank to restore is what was spent plus the top up. We want to change the float from 7,500 to 8,000. So we must increase. We must bring in a new what? 500. And there is an amount that was spent. So what was spent plus the new amount, it gives us 7230. It's not 7430, it's 7230. So you will just write, in case in exams you don't have the correct answer, you write your answer if that is missing in exams. So you'll just say your answer was 7230. Maybe it was a typing error in this case. Instead of 7430, it was supposed to be 7230. Next question. A petty cash purchase is made costing 79.20, inclusive of VAT of 20%. Which of the following entries is correct? Now, inclusive of VAT, so if it's inclusive, 79.20 is inclusive. So 79.20, it adds up to 120%, or just 120. And the VAT is 20%. Now, when we were covering the topic here, VAT, we said that in VAT, it is either inclusive or exclusive. VAT inclusive adds up, if the VAT is 20%, it adds up to 120%. Exclusive adds up to 100%. So if you've been told something is exclusive of VAT, the total should add up to 100%. If it is inclusive of VAT, the total should add up to 120. That is if the VAT is 20%. But currently the VAT rate is maybe 18%. Don't use the current rate, use the rate given in the question. So in the question here, you are being told a petty cash purchase is that, inclusive of VAT of 20%. What are the correct what? Entries. To know the correct entries, we'll first of all calculate the amount of the VAT, which will be 7920 times 20 over 120. So the amount is, let's calculate, is 7920 times 20 divided by 120. It gives us 1320 as the amount of VAT. Now let's come to, remember the other amount was 79 inclusive. So exclusive amount that does not include VAT is 7920 minus 1320, which gives you 7920. You remove the VAT of 1320, it gives you 6,600. So you look for a figure that has got number 1, VAT amount of that. Number 2, that, and number 3, this total. So those are the components we look for. So remember, petty cash purchase. So this is an expense. Expense is debited. So in this case, the net exclusive of VAT is you debit an expense of 6,600. And then you also debit the VAT component. So here you'll have two debits. Debit the expense itself of 6,600. You debit VAT expense of 1320. And you credit what has been spent, cash. You credit cash total of 7920. So we look for an example with this double entry. So the correct one is debit expense 6,600, debit VAT 1320. Yes, A is the correct answer. So A is the correct answer. Debit expense 6, debit VAT, and credit that. Let's see B. B, cash. Debit cash, no, it's an expenditure. You cannot debit cash if it's an expenditure. Debit expense 6336. I don't know how they came up with these, but maybe there is a wrong calculation they did. So this is wrong. The double entry is correct, but the amounts posted are wrong. The credit amount posted is correct, but the debit amounts posted are wrong. And then D, debit 7920, it's not true. And this is not true. So what is debited is 6,600. The next question, number 6. Which of the following items will not appear in a petty cash voucher? A, purpose of the expenditure and details. B, name and signature. Which one of the following items will not appear on a petty cash voucher? Purpose of the expenditure will appear. That will appear. It must appear. Name and signature of petty cashier. No, that does not appear. And name and signature of the recipient. And name and signature of the authorizing payment. So which one will not? Name and signature of the petty cashier. Which one of the following items will not appear in the petty cash? Purpose of the expenditure and details will appear. Name and signature of the petty cashier. I'll come back to that. Name and signature of the recipient must appear. Name and signature of the person authorizing payment. The person authorizing payment must not appear. But name and signature of the petty cashier will appear if the petty cashier is the one giving out. Because we said in a petty cash voucher, is it a cash voucher? Yes. A petty cash voucher, the name of the issuer and the receiver must appear. So these will appear if is the issuer. But these may not appear. The voucher should not know. We should not know who authorized the transaction. So the correct answer is D. Question number 7. Which one of the following items would be likely to be paid out of the petty cash? What can be paid out of the petty cash? Payment to window cleaner of 1,000. Yes, those are small payments which can be paid. Hire, purchase payment for delivery van. No, that is a big expenditure. It's not a small payment. Number 3, a payment for postage stamp. Yes, that postage stamp will appear. And number 4, a payment to a supplier for goods bought on credit. That is not true. Goods bought on credit, of course, will not. The payment to a supplier will not appear. That will appear in a books bought on credit will appear in a sales day book. It may appear in sales return if there are some goods returned because it was bought on credit. And so the correct answer is 1 and 3. So the correct answer is D. The last question. Question number 8. On the first day of every month, cash is drawn from the bank to restore the petty cash interest level to 7,500. On the first day of every month, cash is drawn from the bank to restore the petty cash interest level to 7,500. The opening balance on 1st November was 2,200. On that date, 5,300 was drawn from the bank. 5,300 was drawn from the bank, was withdrawn from the bank. So if you take these plus that, it should come to the amount of 7,500. And expenditure during the month was 1,600. How much should be drawn from the bank to restore the interest? So how much should be drawn? The amount that was spent. To replace it, to return it back to 7,500, the amount that was spent of 1,600. So our correct answer is D. So that brings us to the end of this topic, petty cash book. It brings us to the end of the unit. We will meet in the next unit, which will be on bank reconciliation. Thank you, and let's meet in our next session.